Hello and welcome to the live stream, ladies and gentlemen. I am your host JT, and this is Black Box Trading. It's been a while since we've been on the stream, but not much has happened. We're just consolidating. We're still inside of this bullish flag, consolidating at all-time highs, getting ready for the next leg up. The market is very easily shaken out right now. There is, we're in a large trading range, but it's quite volatile. It's quite volatile, and we did get stopped out of our last trade by a couple $100. We got the entry, nailed the entry by like less than $100, and hit the stop loss by a couple $100 as well. Anyways, let's get into it. It's good to be back. Let's get back into the swing of things. Let's take a look at the king of all crypto. That is Bitcoin. So yeah, this is what we're looking at, ladies and gentlemen. We are looking at this consolidation here. Let me just take that off for just a moment for some clarity's sake. Let's turn alphanumerics off for just a moment and just look at pure price action for a moment. We're consolidating. We're consolidating above all-time high levels. You can see this area back here with the prior double top that everybody was so afraid of. We're consolidating slightly below it, getting a rejection, potential rejection here at the top of the range, also at this area of these two tops right here. But ultimately, this is a bullish formation. Anytime you have a consolidation that is falling, that's generally a bullish setup. You don't want to see a consolidation that's rising. Those are typically referred to as bear flags. Consolidations that come down either in a wedge formation or in a flag formation are bullish formations. The big beautiful bill, or whatever, Donald Trump's new bill that plans to add $5 trillion to the national debt, should be everything you need to know about the price of Bitcoin. We are going to the fucking moon. Bitcoin is going to over $1 million a coin. Potentially even this cycle, we might even get an extended cycle where we move, people are really hung up on the 4-year cycle. Let me just sidebar for a moment here. Let me just talk briefly about this whole 4-year cycle thing. We have two data points, and when you look at them on the macro, like, they're not 4-year cycles. Let's pull this up here. Logarithmic auto. Let's pull that off to the side. These cycles are not the same. Like, the first cycle was super quick. It happened in 2 years. That's not a 4-year cycle. Over here was kind of like the first 4-year cycle from peak to peak was like a 4-year cycle. Then you had one where it was arguable whether this was the first peak. I actually do think that this was the first peak, and this was a dead cat bounce that technically resulted in a higher high. So that was longer than a 4-year cycle. And now here we are again with basically coming up on 4 years in September. We're coming up really close on 4 years, right as things begin to show signs that the market is ready to reverse. Interest rates are going to come down. QE is about to start. Massive bills are being passed that are going to have a ton of money printing attached to them. All that's to say that I don't think you should be too hung up on the 4-year cycle, because we only have realistically two data points, and that's not enough for a data set. There really is no trend. We have a lot of anchoring bias on the 4-year cycle, and that can have an effect on the market. But be open to the idea that as long as money is printing, as long as money is flowing, this bull market can continue for several years forwards. Now, I'm not saying that that's what's going to happen. That's not my prediction here. But I'm saying be open to that as a possibilities. Everything in trading is about balancing probabilities and possibilities. And you need to assign different values to each one of the possibilities. Assign it a probability. So is Is it possible for us to continue on a 2-year bull market from here? Yes. How much probability do you weigh to that? At this point, I would say that that's a probability of maybe 10 to 20%. So I'm not saying that that's the most probable outcome. I'm saying that it is a possible outcome. Now, another possible outcome is that we've topped and we're done and we're going into a bear market. I also assign that kind of 10 to 20%. It's not a very probable possibility. What I give more weight in the current scenario right now is I give more weight to the fact that we will likely break out of this and have some sort of acceleration event into some sort of a blow off top like we've seen in previous cycles, with maybe a little bit more of an extension. You know, we were calling the top we were saying that the top will likely come in around Q3, end of Q3, Q4 of this year. Now I'm giving a higher probability, given the fundamentals of what's going on with the money printing. I'm giving it a higher probability that this cycle does bleed into Q1, potentially even Q2 of next year. So because we're already moving the benchmark for possibilities, we're moving those probabilities with those extended possibilities. Just be open to the fact that, you know, as long as the money's flowing, as long as the money printer goes burr, this thing has more upside. So yeah, that's what we're looking at right now. Now, shorter term, how are we looking on the right now? Are we going to break out of this? Are we going to break above this resistance point? Are we going to get out of this consolidation? Let's turn alpha numerics back on. Now, we are maintaining above the 7 daily moving average. We've got to go to the daily. We're on the 12-hour by accident. Let's go to the daily. We are maintaining above the 7 moving average on alpha numerics. We are above the 7, we are above the 30, and we are above the 50. Those are all good things that you want to see when you're in a bullish, when you're bullish on an asset. Now we are up against a resistance right now. We were rejected. We were rejected here once, twice, and we are potentially looking at a rejection here. Now, we are at the acceleration line of the RSI. So if we can get above this line and close some daily candles above it, the acceleration line is 58 on the RSI when looking on the daily. If we can get a close above the 58 on the RSI, that will likely, in my opinion, signal a breakout of this consolidation. The moment we get a daily candle close above this line, it's gonna break out. So do copy this chart. You need to, if not the range, at least copy the top line here, this trend line here. When we get a daily candle close above this line, it's going to go. So just be prepared for that. Now, short term, do be aware that we could get a little bit of a pullback. When we look here on the 4-hour, when we take a look at the 4-hour, sorry, I just drew a line for no reason. We do have a bearish divergence. You can see a high and a lower high correlating with a high and a higher high. When the highs do not agree with the oscillator, whether you're using MACD, whether you're using stochastic, whether you're using RSI like I am, when the highs are in disagreement, it is bearish. When the lows are in disagreement, it is bullish. So we do have a bearish divergence as it stands right now. On the smaller time frames, so we could get a little bit of a pullback. Now, in the event of a pullback, where would I be looking for buying? Because dips are for buying right now. Do not believe, if you haven't already detoxed from news, do it, because news is holding you back. News is the tool of the elite to control the herd. Don't be the herd. But if you listen to the news, there's a lot of stuff that people are still afraid of. Like, do not watch the news. I cannot stress this enough. You will never make money trading if you watch the news. Period. End of story. Do not watch the news. Do not read the newspaper. Do not listen and engage with people who are watching the news or reading the newspaper. It's all bullshit. It's all fugazi, and it does nothing for your accounts. So detox that and watch your profits increase. But anyways, for a pullback, there's a lot of confluence here at the 0.272 level at 105.945 on the index chart. If we did pull back, now keep in mind we could break out of this consolidation. That daily candle close above signals a breakout in my opinion. But if we did pull back and we bounced on the 0.272, that would be a signal to me that the bulls are really, really strong. I do not use the Fibonacci retracements very often. But when I do, it's almost, it's a measure of market strength. People think, oh, it's got to pull back to the 618. When we get to the 618, that's bullish. I actually don't think that that's really the case. This is kind of a measure of how bullish the market actually is. So for example, if you get a retracement back to the 0.272 and you bounce, the market is very, very bullish, and you should participate to the long side if you see a bounce off of the 272. If we get a retracement to the 382, that's also quite bullish. Things become more neutral when you pull back to the 50 zone. So if we pulled back to this 50, yes, we're bullish, but there's also a lot of bears out there because you can see the effects of the pullback can be quite strong. Now, the 618 is interesting. If you bounce off of it, you do get a lot of demand, but it's also signifying that, a trend could continue, like a consolidation could continue if you hit the 618, because it's easy to move the price down if you're coming to the 618. If the bulls are in control, if the bulls are here and the demand is present, you probably won't hit the 618, which is the golden Fibonacci. You probably won't hit that if the bulls are actually present. So that goes back to the bounce off of the 272. If you do get that bounce off the 272, that's very bullish. And there is a lot of confluence down here as well. You can see that right now we're riding the 4, just barely holding above the 30. Now we do have the 50 right there at the 272, and we have the green wave 200 here at the 272. So there is a lot holding us up at that level. So to get a bounce back there at that level would be healthy and really good for signaling to the market that we are ready to head to higher levels and that the bulls are actually in control. For me, the most perfect breakout of this consolidation, because we are talking about the context of a breakout, I'm expecting a breakout of this consolidation. If we pulled back to the 200, which is the Fibonacci 272, and then broke out, that's a strong signal to me, because that's telling me that we retested this big long automatic rally, and we tested the 272 and bounced. That's showing a lot of strength in the market. That will be enough for me to just confirm a breakout if you get that daily candle close, that pullback, close above, it's off to the races. We're going to impulse to the next level. And the next level for me, for an impulse to the upside, we could do a trend-based fib. It's a fib kind of day today. We don't usually do fibs, but fuck it. Let's do some fibs. Let's do a trend-based Fibonacci. And we'll go from the macro, the impulse low, because we're measuring the next impulse high. So we'll go from the impulse low. That's the funny thing about Fibonacci's is, when people are new to them, they pull fibs all over the place. But what are you trying to do? Are you trying to measure the Fibonacci's inside of a consolidation, or are you trying to measure the Fibonacci's in a macro move, in an impulse move, because we were measuring, this Fibonacci was measuring the rallies and reactions inside of the consolidation. So we're down here, and this was a fib retracement. Now we're doing a fib extension based off of something that hasn't happened yet, which is a breakout of this consolidation. How much can we expect for an acceleration to the upside? And easily 127, that's the 786. Easily we would hit that extension target. So 127, we would very realistically, a high probability for the next impulse move up would be 135,000, with the extended targets being 145 to 158 at the 1.618. Now, on breakouts, on fib extensions, Bitcoin really does love to go for it because it spends so much time trading sideways, and there's a lot of bulls and bears fighting at these consolidation levels. So when Bitcoin finally does break free and do its next impulse move, it often goes for the 1.618. So don't be surprised if you see Bitcoin at around $160,000 a coin on its next rally whenever it gets to the point of breaking out of this consolidation. If we did a measured move from the impulse low to the impulse high and put that from the breakout, we're at the 1.272, so 145. So regardless, it'll be up at some very exciting levels that will definitely grab the attention of the normies and the sheeple. They will definitely start to consider buying Bitcoin again when it's up around that $150,000 level. And I think that if we do have that strong breakout, especially if it comes on that 0.272 and breaks out and begins an impulse rally, I do think that would signify, that would grab the attention of a lot of the herd out there, and you would see people start to get really interested in blockchain technology again. You know, that we haven't seen a lot of the narratives, we haven't seen a lot of the buzzwords flying around in a long time. It's been a very Bitcoin focused bull market thus far. The altcoins have not been performing anywhere near as well as Bitcoin overall. But if we did get that move to $150,000 a coin, now the whole world's going to be looking at Bitcoin again. And when the whole world's looking at Bitcoin, they ask themselves, well, what else can I buy that's not $150,000? And that's when you get the altcoin season. Now, before we transition into TradFi and altcoins, let's just catch up with the chat. Leave a comment in the chat, guys, if you want me to take a look at anything. If you would just want to say hi, say hi. Noman Lantinis, good night from Thailand. Good night, sir. Good morning over here on the other side of the world. How you doing, brother? It's been a minute. Good to see you. Yes, it has been a minute. Laramison Lazar, Crypto Monster, hello from the UK. Hello, howdy. All right, so we'll take a look at the S&P. Now this is the exciting piece for me. Like, guys, wasn't it like a week ago? Wasn't it a week ago that everybody was fucking shitting their pants about World War III, and I was here saying there is no World War III. We're going to have all-time highs, and everything's going to be gravy, and not everything's going to be up only. And if anything, war is good. War is good for the price of assets. Here we are. All-time highs on the S&P 500, and this is a breakout. This is a strong move. This is continuation. This is not going to stop anytime soon. The S&P 500 is going to continue to climb. I don't give a fuck what is going on in the Middle East. I don't give a fuck what is going on in Ukraine or wherever else they have their bullshit narratives going on. The money printer is printing. When the money printer is printing, the price of everything goes up. This is kind of interesting to me because there are a lot of people out there that are like, oh no, the markets are going to fail. The markets are going to go down because the price of everything's getting really expensive. Nobody can afford eggs anymore. Nobody can afford rent anymore. Those are prices. The price of eggs goes up. The price of rent goes up. The price of gas goes up. The price of the S&P 500 goes up. The price of Bitcoin goes up. The price of the NASDAQ goes up. The price of gold goes up. It's not inflation. It's debasement. It's debasement of the currency. These asset prices will go up. Those consumables will go up as well. So don't think that because everything's getting more expensive, that assets don't rise. Everything's getting more expensive. Of course the assets will rise. That's how it works. That's how debasement works. That's how the government is fucking you. Get on board with the story here, ladies and gentlemen. The money is printing. If you don't hold assets, welcome to slavery. That's how it works. Unfortunately, you can't watch this, but just wanted to say hi. Hello, Jasper. We'll see you in the group. We'll see you in the group. Have a good one. Have a good morning, afternoon, or evening, wherever you are. So yeah, the S&P is looking great. We are we're going to be breaking new all-time highs. Same story here on the NASDAQ, exactly as we predicted. Exactly as predicted. NASDAQ on new highs, showing more strength. The NASDAQ is that more reflexive asset. So when there are retracements in the S&P, the retracements are more severe in the NASDAQ. When there are rallies in the S&P, the rallies are more extended in the NASDAQ. So the NASDAQ's looking wonderful. It's looking beautiful. So we are heading on to higher levels. Gold breaking down a little bit. Breaking down, losing its prior low here, this structure here. Doesn't seem to matter much for Bitcoin and the rest of everything else. That's the thing. So like gold is your traditional kind of hedge against uncertainty. Bitcoin is this weird thing where Bitcoin is more of a hedge against inflation. I feel like gold is a hedge against uncertainty, but we don't have uncertainty. We live in a very certain world. I can guarantee you every government around the world is printing money, and I can give you a certain degree of certainty that they are going to continue to print money. So there isn't a lot of uncertainty. Now that should reflect in the price of gold, and maybe we've seen a little bit of that. But gold also has this inverse correlation with the traditional financial assets like the S&P 500 and the NASDAQ. When they are doing well, they represent risk on. When we are risk on, gold is risk off. But anyways, Bitcoin seems to go up when it is risk off and go up when it is risk on. When we're risk on, Bitcoin goes up hard. When we're risk off, Bitcoin goes up a little bit. Let's take a look at silver. Silver getting a little bit of a pullback here, but strong trend overall. Congrats to the silver bugs out there. A lot of people have been holding silver for a long time, and it hasn't really done jack shit, to be perfectly honest. But gold has just been stealing the show. Silver is just kind of leaving its multi-year consolidation. So maybe it's going to play some catch up with gold. I'm not a precious metal guy, but I'm not a precious metal guy because I am a digital nomad, and there's just no way. I can't cross a border with more than $10,000 worth of assets, and I'm certainly not going to be lugging around bars of gold and bars of silver when I only get 20 kilos on a plane. But to all those gold, to all the precious metal people out there, it's been a good bull market for you. So congrats. How's the DXY doing? DXY is quickly approaching rather the bottom of this channel. So this is going to be extremely telling. This is a very important level to pay attention to, because if we bounce here, then very much so we could slow things down. We could slow the rate of things down. Now, there is the possibility that we bounce and asset prices rise, which if the asset prices rise in the context of a bounce in the dollar, it doesn't mean that asset prices are going to go into a bear market, not necessarily anyways, but it is going to mean that asset prices are they got to swim upstream. The dollar is not working in their favor because the dollar is getting stronger, which is the measuring stick, that is the ruler to which assets are valued. So if the ruler is getting larger, it means that the units of whatever it is that you're measuring is going down. I hope that makes sense. Many people know what I'm saying. I'm trying to dumb it down for people that struggle with that, and I'm probably doing a bad job. But anyways, that would kind of be the harder scenario for asset prices, but the money printer is going. The money printer is going full bore. The U.S. is buying their own treasury bonds because there's no more bond market anymore. They just print bonds and then buy them themselves. That is quantitative easing. That is direct money printing. So we have that working for us. What would be even more interesting to see is if they continue to devalue the dollar. If they devalue, like cause the dollar to continue to lose strength. So if we fall out of this channel, if we lose this channel support, which could happen, and it will make headlines and it will scare you. So don't make the same mistake you did the last time you were scared when you thought World War III was going to happen. There will be headlines and you will be like, oh shit, Trump did this and now the whole market's going to collapse. If we fall out of this channel, asset prices are going to go through the fucking roof. Bitcoin is going to go to $1 million. S&P is going to go to 7,500. Everything's going to be in a massive bull market if we lose this level. So don't be afraid. Don't listen to the headlines. The headlines are going to cause you to sell at the lows. They're going to freak you the hell out. But ultimately, how this will resolve is everything will be at a higher price. Everything will be at a higher price. So watch out for that. Do we bounce or do we fall out of this multi-year consolidation? This is a trend, an uptrend that has been trending since the bottom of the great financial crisis. So it could be triggering the next financial crisis. I don't know. We'll see. Satoshi Corner, hi from Thailand. Good to have you back. Good to be back. All right. Now, let's go into alts. That's what everybody wants to know, right? How are we doing in the alts? Well, let me tell you how we're doing in the alts. Still shit. Shocker. We are still climbing in altcoin dominance. I did get a comment in the private group with somebody thanking me, saying, thank you for keeping me out of altcoins, because they've really done nothing to help anybody's portfolio. Obviously, there are outliers, and I don't give a shit about you trolls that are like, well, Kaspa did this, and Sui did that, and Solana's I don't give a fuck. Overall, when you look at the market, if you are an altcoin investor, statistically speaking, you're wrecked. If you are an altcoin investor, statistically speaking, you haven't made any money, you have lost money. The vast majority of altcoin investors are down bad, whereas Bitcoin investors are up 5x at least. So that's all I'm saying with this chart. When altcoin season finally kicks off, I'm going to be so excited to be making positive altcoin content because it's so good for the YouTube channel. It's so much better. It's so much better to say people's investments are going to do well than it is for me to say, hold on, it's not ready yet and it's probably going to go down. But that's where we're at. The altcoins, it's not time. This trend will continue. This chart is continuing to head to higher levels. As Bitcoin dominance climbs, you don't touch alts. It's that simple. Don't touch alts. Don't invest in alts. Don't fall for the bullshit narratives. Don't fall into the traps. Oh, X coin is going to be the next Bitcoin, or, Bitcoin can't do this and this coin can do that. I don't give a fuck. When this chart is going up, you don't touch alts. When this chart begins to trend down, which I think it will do right around here at the 70% dominance in Bitcoin, when this chart finally reverses course to the downside and begins to trend down back to 40% in a very steep and aggressive way, that is what is altcoin season, by the way. On average, most altcoin investors will experience a 30x. So chill. It's not time. I will subscribe to this channel because I will be very vocal as to the moment at which I think it is time. I'm going to make people a shit ton of money just like I did last cycle. I'm going to make them a lot of money just like I did the cycle prior. I trade the cycles. I trade the macro swings. I trade the macro environments. There's a reason I haven't been in altcoins. And when I do make those altcoin allocations, I will be extremely vocal about it. I would tell you to come into the Discord to get up-to-date information on alts, but honestly, there will be plenty of altcoin content here on the YouTube channel. I will be here to tell you altcoin season has begun, and I'm one of the few content creators out there that is going against the grain and not pumping up my numbers, not pumping up my viewership, for the sake of just being able to say it's altcoin season. If I sat here for the last 2 years and said it's altcoin season, it's altcoin season, just like all the other crypto influencers, I would have way more subscribers. I would have a much larger following. I would do higher volumes with my products. But I'm not going to do that. I'm going to give it to you. I'm going to tell you guys the information that I think is valuable. I'm going to tell you guys the information which I think is going to serve you the best, that is going to give you the best opportunities for capitalizing on these market cycles at the cost of my overall bottom line. But, I got into YouTube with that. That is the ethos of this channel. That is what I'm always going to do. Yes, I've got products where I make money off of people trading. I don't want you trading until it is time to trade, and it's just not time. So anyways, I've beaten that to death. I continue to beat that to death. This is nothing but up. When this goes down, and I don't mean a red day, everybody got excited here. I said, I need to see a trend change. We don't have a trend change. Everybody got excited here. No, I mean a trend change, not one red week. Nobody cares about one red week when you're trying to avoid this monstrosity. So this is the ETH chart. I was starting to get convinced that maybe we weren't going to get that double bottom that I was talking about, but it's looking like we're coming back down. So ETH coming back down for the double bottom, like we thought it would. Solana also not having a lot of follow through with this bullish divergence here. So it might come down for a triple bottom, a third low, maybe down to the 100,000 sat level, potentially. If Bitcoin dominance climbs to 70%, then very likely Solana will go to 100,000 sats per SOL. That would be the buy for me, 100%, especially if it reaches that level when Bitcoin's at 70. I really don't think Bitcoin's going to go above 70% dominance. And even if it does, it's not going to 80. There's no way. I think it would go to 71, 72. It wouldn't even go to 75. So once we start getting up, that's pretty overheated for Bitcoin dominance, and we would definitely be falling from there. So that's looking good. Caspa, we got you out in a really good time. I think we got you out here. Actually, we got you out on the dollar pair. Caspa USD, we got you out right here. There's the exit. Fell from there. Not time to get back in, obviously. Sonic, I was tempted down here because we tested this support level so many times. I didn't take it because Bitcoin dominance was climbing. This is why Bitcoin dominance is so important. Just, it takes all of your bias away. You're like, oh, they're doing this, or they have a mainnet launch, or they're going to be partnering with so and so, or Google is announcing that they're going to be using X blockchain or whatever. Like, you can very easily become fundamentaled in this space. Don't become fundamentaled. Just follow the charts. Follow the price action. If people are buying, you can see it. It looks like a green candle. So if people are not buying, you can see it. It looks like a red candle. That's all you need to know. Are people buying or are people selling? If the news is super exciting, super hyped, super bullish, and people aren't buying, it goes down. Perfect example of that is Track. Track has been grinding, man. Benny the dev is just cranking product after product after product out. There is so much to be fundamentally bullish on Track about. Yet, here we are. Look at this. Huge retracement. Flatlined. Dead. This looks like a ghost chain. There is so much developer activity happening on Track right now. It's silly. And it looks like a ghost chain. So that goes to show that the fundamentals really do not matter. What matters is hype, liquidity. Hype and liquidity. This is a game of musical chairs. Who's got the money? Where's the money going? That's it. Fundamentals help to capture liquidity once liquidity starts to flow again. Once the money starts to change hands and goes to the ordinal sector or the Bitcoin ecosystem, you better believe that Track is going to suck up a shit ton of liquidity because the fundamentals of Track are so strong. But until that happens, until there's a catalyst to grab the market's attention and divert liquidity in that direction, it's down only. It's down only. The fundamentals only help when the context is correct. And right now, the context is Bitcoin dominance keeps climbing. All right, let's take a look at some of the other ones that are popular, but I don't really personally care about too much. Cardano taking a shit. Really interesting press here on Cardano with the founder, Charles Hoskinson, taking a massive Bitcoin position, so selling a bunch of Cardano to take it in the treasury. It might not have all been Cardano. They might have been sitting on a bunch of stables, but I don't care. The leader of the protocol of this competitor blockchain says, you know what? We're going to take a really big position in Bitcoin. That should tell you everything that you need to know about the protocol itself. That should tell you everything you need to know about Cardano. And the market did not like it. So you can see that we're way back down at the lows here, sitting at 529 sats per ADA. And that's the lows. That's the lows, ladies and gentlemen. I mean, we're right back to where we started here, from the prior low in November of 2024. It's got a lot of work to do to repair this trend, and I think it can do well when the trend changes, but as it stands right now, the trend is down, so you definitely want to be hands off with that. XRP got super bullish earlier in the year, and I can't remember why, but it's still trapped in this trading range. So until it can break out of this trading range, for me personally, I don't think there's anything too exciting going on with XRP. I keep this chart pretty simple. Outside of the channel, if we break out, get bullish, because XRP is going to fucking moon, because that's what XRP does, is it goes up super fast without reason, and like the whole world latches on because it's such a digestible narrative for people. Oh, this is something that the banks are going to use. They just gobble it up. That's the only justification that I can think of for why XRP goes up so quickly. That and the unit bias. It's cheap, right? It's people can get lots of them. Currently sitting at 2,000 sats per XRP, but I'm not bullish until we can get above 3,000 sats per XRP. So at least a 50% rally from where we are right now in Bitcoin terms before we approach my line in the sand where when price is above, I'm bullish. And if price is below, I remain bearish on XRP. All right. I think we're going to wrap things up here. We'll start streaming a little bit more. If you guys haven't already subscribed, please subscribe to the channel. We try to keep it real here. We try to keep it honest. When altcoin, if for no other reason, just to have somebody who has been trading this market for multiple cycles, knows what it's like to fully capitalize on altcoin season, knowing exactly when altcoin season is going to start. If you want a no bullshit altcoin shill, most of the creators out there, they're just trying to drum up volume for whatever product it is that they are selling. Obviously we want to drum up products for we want to drum up volume for our products as well, but I'm not going to do it. I'm not going to do it where you are penalized for that. So subscribe to the channel to know when altcoin season will actually start, because I will be very vocal when altcoin season actually starts. And go to blackbox.pro and get set up with your free Bitcoin trading bot, where we got 3 different bots right now. One is doing swing trades. The other one's doing scalps. The other one's doing long-term investment swings. And signing up also grants you free access to the Discord, where we are trading all of our entries, exits, take profits, sharing all of the alpha on many of your favorite altcoins. All that and more is available for free. So definitely go to blackbox.pro, BLKBöX.pro, sign up for free. Actually for free. Not free for a little bit, not free trial. Free forever. We get our money from the exchange. So if ever you take a trade, all that we ask is that you trade with one of our partners, currently partnered with BitGet, Bybit, and Blowfin. And that's it. There's no strings attached. We get a very small microtransaction of your trade. We get 0.003% of your trade. These are standard fees that you pay on any exchange. If you're already trading on Binance, you are already paying those fees. So we get a small microtransaction of that. And we want to keep the community built with the incentives aligned with you guys being able to thrive. The more you make, the more we make. So we want to keep that incentive ethical and aligned with what everybody wants, and what everybody wants is everybody wants to make money. So with that, I bid you adieu. Thank you for joining into the live stream. We will see you guys more regularly. I haven't quite nailed in a live stream schedule just yet, but if you want to keep up to date, definitely hop into the Discord. And until next time, please trade safe. It is jungle out there. Peace.